Hi guys, my name is Ivan Chauke. I'm a writer, I'm a speaker, and I'm an engineer. If you want to get more videos on this channel, please make sure that you stay tuned by subscribing, commenting, and liking. Anyway, this is part of the series that I promised you guys. Just to give you a backstory, I bought my car in 2018, November 25th, right? So that will mean that this year, the 25th of November, I was celebrating 6 years having the car. Now, I'm using this series to bring educational content on some of the challenges, some of the inspirations, and some of the ideas that I think if you check them, if you observe them, they can able to put you in a better position. Because I believe that the commitment of 6 years, which is like 72 months, and the commitment of you know the 96 years, so 96 months, sorry, of what people are taking up, I think it's a very big commitment, guys. So you really need to make sure that you actually understand what you're doing when you sign up with this agreement. Anyway, just to give a backstory, so I started the idea of putting out content about cars when I just recently created my TikTok channel, and for me it had nothing to do with like maybe this is one thing that I want to talk about, or for me it was just a space where I said, you know what, maybe these things that I'm talking about, other people will want to know as well, because I was in a space where I never got to be taught or to be in a position where someone was upfront with me with so much details about the process of buying a car, right? So I told myself that, you know what, since that I've been in this industry, since I've bought my own car now for the past 6 years, and there's some struggles and there's some challenges that I've encountered. Would it not make sense for me if I can be able to document this journey and how things has been for me? So the first video that I've done, and if you haven't seen it, please check it out. It's a video where I was talking about the first step in buying a car. And the first step in buying a car, it's not just to get money. It's not to decide what type of car do you want. It's not like, is there speed, is there a spec for this car, and all those type of things. I think, and I still believe that the most important thing, the most important decision that you need to do before buying a car is this. You need to decide that the car that I'm buying, I need to use my head instead of my heart, right? Because if you're able to settle that debate, you are able to make the right decision. Why? Because some of us, we put ourselves in a situation where, you're driven by your emotions, how you feel, and status, and all of these things that are around you. And you find yourself in a situation where you get something that maybe you don't afford at that particular moment. And now you're in a situation where you have to downgrade. And guys, no matter what you are downgrading from, whether it's a car, whether it's whatever that is, downgrading is not so nice. So many people, we cannot deal with that emotion, with that transition of having to downgrade. So, it's always better for you that before you can make these decisions, then you start with something that you can upgrade to. I always tell people this, that since downgrading from a lifestyle is so painful, it's always better that you delay yourself from upgrading the lifestyle. Because you can now know that, okay, you know what, I'm staying in a shack, I'm wearing a maybe 5 rand t-shirt. So from here, if you have got money, I can only go up, right? But if you're in a space where like you're already up, to just come down, it's not so much easy. Anyway, so on this particular video, what I want to discuss that is the type of financing that are available when you're about to buy a car, right? Because obviously, I'm speaking from experience of someone who is buying a brand new car, is still very young, and you're going to the bank and you say, "Bank, can you please check if I'm liable, I'm legitimate enough for you can be able to give so much debt," right? And obviously, the first step to financing is that if you are not going to use your own money, which most of us we don't have, right? You know, if you have 300,000 rand right now in your bank that is lying to go and buy a car, I will really need to talk to you because I want to know how you made that money. Anyway, I've seen stories as well of people that have saved money, like hard cash. They've saved money and they put themselves in a situation where they can be able to purchase their car from that type of an income, right? I've seen those stories. And for me, that is a very inspirational story. If you have some of those stories, I will really want to know. So The first step when it comes to financing is that if you're not going to use your own money, meaning if you're not going to use the money that you have accumulated, and you're buying a brand new car, right? Let me use that as a start. I think I'm going to use this series to talk about different ways of buying a car. If you're buying a car from a dealer, if you're buying a car from someone, if you're buying a car maybe from, We Buy Cars, Wheelie, iCar, all those available outlets for you to be able to buy a car from. I will have that as part of the series. But what I want to talk about right now is that you, as an individual, you want to buy a car. Where do you start? Now, if you don't have your own money, it means that you're going to be at the mercy of the financial institutions. So, which means that you would have to go through credit checks. So they will have to check, like, what is your credit score? If your score is like this, what is your age? What is your risk? What is your appetite, credit history, all of that, right? Now, what has been so much interesting for me, which I have not realized or known then, was the fact that two people can be coming out of varsity, for example, uh, Lebuhang and Lerato, for example, they can be coming out of the same institution, right? They've got maybe the same degree, they have studied the same thing, whatever, whatsoever factors that is related to their profiles, right? And when they go to the bank and they say, Bank, we need individual loans to be able to purchase a vehicle, the bank will give them different rates. For me, that was it was a shocker. I'm like, how does this come to be? And I don't want to be political about, the race and all of this type of things, but I just want to let you guys know that if you have a friend and then you ask him, like, how much are you paying for your car, and they say, I'm paying 6.5, I got 10.5 rate, don't think that because your friend got that rate, you're also going to be subject to the same rate. It's a different game altogether. You have got your own profile, the same way that you do with your social media account, that you have got your own profile, and your sister have got their own profile, and your family has got their own profile. That is the same thing that happens when it comes to credit and you having to acquire money from a financial institution. So I said we're dealing with you as an individual, right? So the first thing that you will have to do, they'll go through your credit check. Like, maybe you've got an outstanding account somewhere. Maybe you're not paying the account consistently. Maybe you are on credit bureau. So they'll check all of that, right? And then after they've checked, what are they going to do? They're going to say that, okay, you know what, this is the car that you want to purchase, and in most cases, this is what happens. You will have maybe went to as a dealer X, right? Let me not sell them. You would have went to dealer X. So you go to dealer X and you say, dealer X, I want to purchase this car, right? So they'll say to you, send us your 3 month bank statement, send us your ID copy, send us your proof of address, send us your maybe whatever next that they'll want from you, right? Then they will use that to be able to get finance for you. So they'll say maybe we've got in-house financing, which is just to say that actually we don't want you to do the admin. We're gonna get the money for ourselves for the admin, and we're gonna talk to the banks and get you the best deal, which is not gonna happen, by the way. So what now happens is that they're gonna take your details, or that's what they told me, that they take my details, they send it to different institutions, right? They say, guys, here's a customer. This is the dealer, remember. So it's a dealer that is sharing the car that we have sent. This is a brand new car. I'm using that as an example because that's the surest experience that I'm talking about. So they send it through, right? And then different banks will say that, okay, looking at this guy, we think that it's not so much of a risk, right? There's not much risk on him, so we're gonna give him 13.5% interest, for this loan. So we're giving him like the car, it's 300,000 rand. So we're gonna give him maybe 310, or maybe, you know, whatsoever, 310 as an example. So they'll say, this is what we're gonna give him, right? And maybe another bank will say that, oh, we're gonna give him 13.5, but only if he come and bank with us, right? Another bank will say that, okay, we're going to give him 14.5, but that is a fixed interest, right? And that is the most important thing that I also want you guys to be aware of, that when it comes to the interest that the banks gives you, it's not always the same type of interest that they give you. So, and terminologies are very important, and that's what I'm trying to bring with this video, that you can get a linked interest and you can get a fixed interest. The linked interest, it's an interest that when the repo rate, when Reserve Bank says that the interest has went down, now your interest is also going to come down. If Reserve Bank says that the interest has went up, your interest is also going to go up. Let me just pause here. Remember, the banks go to Reserve Bank and they say, please borrow us money. So the repo rate is the rate in which the banks are borrowing money from the Reserve Bank. So after they have borrowed money, what do they have to do? They must come and borrow you money. So now, when they borrow you money, they have to put their own markup, their own interest. Remember, the banks is in the business of selling what? Money, right? That's their product. The banks are selling money. So they've got two ways that they can be able to lend you that money. One is that when Reserve Bank changes their interest, it goes up. It means that your interest as well is going to go up. Then when Reserve Bank says that your interest is going to go down, your interest is also going to go down. So this is where most of the guys were so much happy during the COVID, because because of the movement in the market, most of us, what happened? The interest went low, right? So what happens? The Reserve Bank said that, okay, guys, the interests are going low. The banks now send you letters to say that, you know what? Instead of you paying 5,000 Rand for the next coming interest, you're going to be paying for this so much, right? That's how it happens. So this is where maybe I need to warn you as well. This is where the biggest mistake that most people do. So when you are reading, when you are listening to that agreement that the bank gives you, you have to listen to that very carefully, because the bank can say to you, we're giving you 12.5% linked rate, right? So what does that mean? It means that whenever Reserve Bank takes up their interest up, yours is also going to go up. Whenever they take it down, yours is also going to take it down. Or they can say to you, Reserve Bank is, we as a bank, we're giving you 14.5 fixed interest. That means that no matter what happens, you're always going to be paying that installment. You're always going to be paying that for the rest of the term agreement. That's important. So which means that you're not going to fluctuate in terms of your installment, paying this and paying that. You're only going to paying that because it's a fixed interest rate, right? And the linked, you're always going to be fluctuating. If it goes up, you're going to pay more. If it goes down, you're going to pay less. That is very much more important. But now, the most interesting thing for me was to realize that actually when the bank is applying something on your behalf, there are certain things that they don't tell you, because actually they are the middleman, and the middleman has to make money. They are not there to really make money for you, right? They are there because they want to make money. So what happens is that some of the sales guys, what they do is that they will not tell you what another bank has said. An example, let's have example, Bank X says that we're giving him 14.5% fixed rate, which means that this interest doesn't change on the duration of the time, right? They will not tell you that, okay, the bank says that 14.5, the interest is not changing if you're going to move your salary, for example, into their bank, right? They will not say that. They'll just say, you know what? We only got Bank X that is saying that they're offering you 13.5%. And they would have first considered their own way, their own portion on what the bank is going to give you. So you must be very, very much more careful about that. I have not found a way. How do you mitigate that? How do you deal with that? But I'm still asking people, asking questions, and how to go about that. Now, what is very interesting, which I want you guys to let me know in the comments, is that someone told me, said that actually you can actually go to the bank and get a loan to purchase the car. So if you have used that option, I want you to know: have you ever went to the bank and to negotiate for a rate, so that before they can take that money into your vehicle? So you don't use the sales guys, you don't use the bank, the internal in-house financing, but you just go to the bank straight and you say, I've seen this car at this place, I want to finance it. Like, guys, if you have done that, I want to know, like, how did that work out for you? So that is the most important thing. So in this video, what I wanted to spend most of my time explaining is that there are two most important things that you need to understand when it comes to financing, right? Actually, three, by the way. I think it can be a lot, but I think there are three that are very fundamental. Number one is that you need to understand that you, as an individual, you are the one who is responsible for the type of funding and interest that you get. You know, it's just because your friend has received this rate doesn't mean that you're going to get the same rate as well. That's number one. Number two, you need to understand the type of agreement that you have received in terms of the interest. Is this a linked interest rate? Is this a fixed interest rate? Because whatever that is going to influence your debt, right? Number three, one thing that you must be able to realize is that no matter which part of the debt that you're in, you need to make sure that you understand the terms. How long am I going to be paying for this, right? So that you make up your mind correctly to say that, okay, if I'm going to be paying for this for 6 years, right? And maybe I want to keep my car, because I think that is very important as well. Like, you need to make up your mind and before you buy the car. And understand circumstances change. You lose your job, you lose weight, maybe you relocate, you lose this, you get divorced. All of that, they do happen. But before you can decide on so many factors, you need to be very much more well aware to say, you know what, I'm going to keep this car. Because if you say you're going to keep this car, it's going to influence your financial decisions and lifestyle. If you're saying that after 3 years you're going to trade the car back, that also is going to affect your lifestyle and your finances. So the most important thing that I want you guys to remember on this video is that you need to understand, number one, are you going to keep this car or are you going to trade it after 3 years? Number two, are you going to take a linked interest, the interest that goes up and down based on the Reserve Bank, or are you going to take a fixed? It's up to you. Now, the last one, what you need to remember is that how long do you want to take this loan? Because that is important as well, right? And you need to make sure that you understand that, and you need to see that on black and white. Most people that have inboxed me on TikTok, they have told me that I did not realize that I've signed up 96 months, which I think approximately 8 years, if my math is right. Now, guys, can you imagine for 8 years while you're paying for this thing? Sometimes maybe you've got a family, you just bought like a very small car, but now you need a bigger car because you need to put the pram, you need to put this and whatsoever. It's a lot. So you have to be very much more aware. Don't allow the excitement of buying a car to get you. And in closing, to avoid that excitement to get you, here's what you must always remember. You know, uh, you need to try, you must shop before you can buy. That's very important. Before you can buy, you must shop. So you just go to random dealerships, checking for this car, you know, this and that. You look and then you ask questions, because at that time you don't need that thing at that moment, which means that you are not susceptible to manipulation. Once you need it right now for this moment, you become susceptible for manipulation. So the first thing that you want to do is that before you can do all of this thing, you need to shop before you can buy. That's very important. Please let me know what was your takeaway on this video. Until I see you again on path 3. Cheers.